In 2017, the Private Equity Observatory at HEC has teamed up with the trade journal Private Equity International to create a private equity hall of fame featuring those private equity funds who've been stellar at the value creation through their activity. A hall of fame typically puts the spotlight on those members of a certain community who've been outstanding over the life of their career. And in private equity, this basically means that we want to highlight those private equity funds who, towards the end of their life, have been outstanding with respect to value creation in 3 different criteria. We screen private equity funds in the buyout sector systematically and look for those who meet the 3 qualifying criteria for the Hall of Fame. They're related to performance, but to different dimensions of performance. So we require every private equity fund who wants to enter the Hall of Fame to have generated at least $2 billion in alpha. Alpha defined as dollars that investors have gained in excess of the returns that they could have gotten at the stock market. At the same time, we require an annual performance above the stock market of 15%, so an annualized alpha of 15%. And just to make sure this translates into a sufficient amount of cash that is returned to the investors, we also require the fund to have at least doubled the investor's capital, again in alpha terms, so doubled the money, always in excess of the returns that would have been available at the stock market. This are a set of very, very high, difficult to beat criteria, and so there's a very small number of private equity firms that qualify for the Hall of Fame. We periodically screen the market and look for new funds that qualify, but structurally a fund has to be fairly old, fairly mature in its activity, because we only consider performance to be relevant and qualifying for the Hall of Fame when it's actually being translated into cash. In the middle of their life, many private equity funds are active, look good, but a lot of the performance is still based on companies they still own, on the net asset values of those companies. We ignore those net asset values and only consider a private equity fund as ready for the Hall of Fame if and when these values have been actually translated into cash returned back to the investors.